I have a non-consensus view because I looked at Fed Watch recently in the June meeting. The odds of a rate cut are like 4%, and I think that's horribly wrong. I think there's a very good chance Warsh is going to get in there and he's going to bully the board into cutting rates, and that's going to start another credit cycle, and it's going to light fire underneath Bitcoin and gold and silver. Although gold and silver already had a big move, but I think they'll start trending higher as well. But Bitcoin in gold terms is incredibly cheap. I mean, I've been selling gold and silver things to buy Bitcoin because it's just so asymmetric right now. So it's a very interesting time.
One of Lepard's key observations is that Bitcoin often behaves in ways that defy expectations. Despite strong institutional inflows, particularly through ETFs, Bitcoin has not surged as many anticipated. Instead, it has entered a period of relative stagnation. But this, Lepard argues, is not unusual. Historically, Bitcoin has gone through long dormant phases where price action appears subdued, only to suddenly explode upward. A prime example is late 2020, when Bitcoin sat around $10,000 before skyrocketing to $60,000 within months. According to Lepard, we may be witnessing a similar setup today. However, there's a twist: the increasing financialization of Bitcoin. As institutions enter the space, banks, hedge funds, ETFs, they bring with them traditional financial tools like short selling options and futures. These mechanisms introduce the ability to suppress or manipulate price in the short term. This phenomenon, sometimes referred to as paper Bitcoin, may explain why the asset hasn't reacted as strongly as expected to bullish catalysts. Yet Lepard remains confident when Bitcoin breaks free from this suppression, the move could be explosive, potentially doubling, tripling, or even more over time.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
It's interesting, isn't it? I mean, there've been huge ETF buys and everything else. I mean, Bitcoin's always counterintuitive. It always does what you don't expect it to do. And I've talked about this in other podcasts. I think there's some paper Bitcoin out there. I mean, I think there's some people who've shorted it and continue to short it. They're going to be wrong and they're going to get their faces ripped off. And because of that, because of the financialization of Bitcoin, and that's what, I mean, look, we had to go through this stage, right? If we want Bitcoin to be global sovereign money, it's got to go through the stage of replacing the old money. And so it's got to be adopted by banks and insurance companies and sovereign wealth funds and everybody else, and ETFs and all of that. But when you bring all that in, you bring in the ability to rehypothecate it, to short it, and to write options against it, and have futures and all of that sort of stuff. So all that stuff, in my opinion, is kind of suppressed the price. And the signal right now is pretty easy to kind of get depressed about, well, gee, Bitcoin really isn't going anywhere. But if we look at how Bitcoin has behaved in the past, it's done this in the past where it just sits there dormant, and then it wakes up one day and it goes crazy. And it did this in 2020, in October 2020. I mean, and usually it does it right after gold's had a big move. And by the way, the last 2 years, gold had a really big move. I mean, gold went from 2,000 to 5,000. So in 2020 and fall of 2020, Bitcoin was $10,000, I think, going in September. And, 7 months later, it was at 60. So it did a 6X. Now, I'm not suggesting we're going to do a 6X off of 75, but I think we're easily going to do a 2X and maybe a 3 or 4X when it breaks free on the next run. And I kind of see that as being related to or tied to, the next Fed monetary regime. I mean, there are all these interesting things coming together at once. We've got a big deficit to begin with, but we got the war is going to increase the deficit. So it's not making the fiscal situation any better. I mean, that's Lynn's "nothing stops this train" meme. And then we've got, Powell, who's tried to be tough on monetary stuff and has not cut rates the way Trump wanted. And he did cave in, and by the way, and gave up a little bit of by going back to QE. He didn't call it QE; they call it reserve management purchases or reserve purchase management, something like that. But anyway, it was 40 billion a month. Although in last Monday they just took it down to 25, which I think is kind of a head fake. There's a big change coming, right? I mean, Warsh is going to be made Fed chair in a month, assuming they can get him approved. And my sense is ultimately, right now, Senator Till is blocking that. He's blocking it because he wants them to drop the prosecution of Powell for lying about the building cost overruns. And I think they probably will. And the reason I think they will is that they'll view what Warsh is going to do as being more important and more urgent. And so Warsh will get in there. And again, I wrote about this in my quarterly. It's on my website. But Warsh will get in there, and yeah, I think he's going to start cutting rates. He's already indicated in a Wall Street Journal editorial and several public speeches his belief that AI productivity increases give the Fed room to reduce rates without spiking inflation. All indicators in a regular world, all indicators say the Fed should be raising rates. I mean, we got inflation everywhere, and it's about to get worse as a result of the war. And yet, I have a non-consensus view because I looked at Fed Watch recently in the June meeting. The odds of a rate cut are like 4%, and I think that's horribly wrong. I think there's a very good chance Warsh is going to get in there and he's going to bully the board into cutting rates, and that's going to start another credit cycle, and it's going to light fire underneath Bitcoin and gold and silver. Although gold and silver already had a big move, but I think they'll start trending higher as well. But Bitcoin in gold terms is incredibly cheap. I mean, I've been selling gold and silver things to buy Bitcoin because it's just so asymmetric right now. So it's a very interesting time, with all these moving pieces, and the war is just another one of them. But Simon kind of thinks the war is theater. I mean, there's an argument that maybe it is. I don't really know. I don't really know. I mean, I have theories about how and why it happened. We'll have to see. I mean, one thing that's definitely proving to be true, remember when they started, he said it'd be a couple weeks, a month at most. Well, here we are 6 weeks into it. And this echoes what Rumsfeld said, back in the Iraq War. Oh, this will be 6 months, a year at the most. Of course, we were there for, 5+ years or 6 years, whatever it was. It's easier to start a war than it is to end one. And so there's a lot of disruption that's going to take place as a result of that. And that's going to be chaotic for the global economy. Luke Roman has done a great job of pointing out, the second and third order effects of if the strait remains closed for a long period of time, as measured in another few months. I mean, it's already starting to impact some supply chains. I mean, you see jet fuel in Europe is up, 90%, and you've got countries in Asia, restricting use of hydrocarbons and fuels because they're running out. The economy is going to take a hit, and in a highly leveraged economy with a stock market at record valuations, if things really start to take a hit and slow down, that's not going to be good. And we're running, the thing that's most amazing to me, Paula, is that we're running this deficit, this 1.8 last year, probably 192, maybe higher this year. And we got a chart on that in the quarterly. This is with a healthy stock market and full employment, relatively full employment. I mean, and historically, in 2008 or 2000, or COVID, when the stock market takes a dive and employment takes a dive, the deficit totally blows out. And so, we're running a big deficit before anything's broken. Wait till something breaks. If something breaks, I'm not saying it will, but it could. If something breaks, the deficit's going to get only larger. And so these all lead to, what I'm kind of famous for and what I've been pushing for, what I wrote a book about, which is, eventually, their alternative is going to be to let the whole thing collapse like 1929. Everyone's going to go bankrupt because nobody can pay back the debt, or, create money and print like crazy to try and get the next credit cycle going, the next round of growth going, and what I call the big print. And so I think that's on deck. But whether they'll do it before or after we have a correlation of one event, I don't know. By correlation of one event, I mean something really breaks, like in the GFC, housing market broke, banks broke, everything broke. Paulson came in and said, "Hey, give us 700 billion, or the whole, the ATMs aren't going to work in the morning," and so they gave him 700 billion. COVID, same story. We're shutting down the world economy. Everything was going to zero, including U.S. Treasury bond. There was no bid for it. So Powell came in and imitated Mario Draghi and said, whatever it takes, we're going to print enough money to keep this thing going. So that's a correlation of one event where something really breaks. That could happen. And if it does, the balance sheet's going to go from 6.6 trillion to 15 to 20 trillion. The alternative is kind of what I call just creeping debasement, where they up the QE number, they keep rates low. We kind of limp along, and we're definitely debasing, but not in a massive one-time big print. More of, Lynn calls it a gradual print. I'd call it, kind of a moderate print. But both of those things are inflation. Of course, the third alternative would be to let it all collapse, or to try austerity, or to cut everything back, et cetera. Although, we're at the stage where even if we tried, fiscal austerity, that would croak the markets and the economy. So they really are kind of trapped. And sadly, I don't think most people have any understanding that this is going on in the background. because these things take years to play out and everyone's time frame attention span is about, one news cycle or a month or a week or whatever, people can't see that it's coming, but it is coming. And, I think it could happen this year, but yeah, I could be wrong. It could be 27, 28. I doubt they'll make it that far, but it's coming.
Lepard points to subtle signals from policymakers as evidence that preparations are already underway. One key example is comments from Hank Paulson, who recently warned about vulnerabilities in the bond market and suggested the need for emergency intervention plans. For Lepard, this is no coincidence. When figures like Paulson speak publicly after years of silence, it often signals internal concern. Similarly, potential shifts in Federal Reserve leadership and policy direction could accelerate the transition toward looser monetary conditions. Even discussions around AI-driven productivity gains are being used to justify potential rate cuts, despite persistent inflation.
That's clearly a piece of the whole war is, whether intentional or unintentional, it's definitely dethroning the dollar. And we're getting, look, we need, the empire-centric U.S.-based world of dollar hegemony and supremacy, that's falling apart. And that was falling apart long before the war, but it seems to be falling apart with more rapidly, and things like the war accelerate that. We just saw, we were supposed to be the military superpower, and we just saw, a modest-sized country, Iran, cripple one of our, probably two of our carriers, and wipe out, jets that we spent $100 million to build, wipe them out with $30,000 drones, and close an important choke point for, energy and fertilizer and a lot of other things that the world needs to operate on, the Strait of Hormuz. And so, all of these things are, to me, clues of the direction that we're going, which is it's not going to be king dollar anymore. Actually, in the quarterly report I just wrote and published, it's on our Twitter feed. We talked about how we're moving to a petro-sat world, Satoshis, because, interestingly, Iran said they're only going to accept payment for the transit fees through the strait in Satoshis. Not even stable coins. And it was interesting to me to learn that the U.S. through the Genius Act and related Clarity Act has gained the ability, I think, to sanction the stable coins. And they always had it with Circle because Circle was really very friendly with the U.S. government. But I think Tether has come underneath the umbrella as well. And so, now if you really want to have non-sovereign money that somebody can't grab or sanction, because, like we sanctioned the Russian reserves and, when they invaded Ukraine, you've got to be in either gold or Bitcoin. And it's kind of clunky to pay for a straight transit fee in gold, but it's pretty simple to pay for a straight transit fee in Bitcoin. So that's a very big use case and a positive. And it just kind of shows where we're going here. And then, you got a lot of other interesting developments taking place. This morning, Saylor bought last week, they bought 34,000 Bitcoin. If you annualize that, and that's not realistic. Some of that's because he had a huge spike in purchases in Stretch, STRC, to capture the dividend. If you annualize that, that's 1.8 million Bitcoin a year. It's nuts. To me, he's running a speculative attack on the dollar. The dollar is down this morning, and gold and silver are kind of consolidating for the next higher move. And I think Bitcoin is about to launch. At least it feels like, it is to me. I think so. It all depends on government policies. It all depends on what breaks and what doesn't break. They've had a couple of models. They want to avoid having a quote unquote big print. They'd like to slowly debase the currency and hold everything together. And they're going to try and do that. But let's go back to Hank Paulson's comments, because I think this is really important. I think people need to understand this. So Hank Paulson, for those who don't know, is a guy who was the Treasury Secretary during the Obama administration it was the Bush administration. The GFC, global financial crisis, happened in 2008. As we all know, there was a housing bubble. The Big Short, the movie, The Big Short tells the story. There's a housing bubble. Everyone got way out over their skis, tons and tons of leverage. Banks were incredibly levered. It all came crashing down. And so he was the guy who orchestrated the rescue through that in conjunction with Bernanke and Tim Geithner. And, he's retired now. He's 80 years old, I think. And he basically, should be playing with his grandkids and not saying anything. And you haven't heard from him since then. It's been a long time, right? That's 16 years ago. So it's kind of like, okay, suddenly he surfaces and gives a mainstream interview on a mainstream media source, I think it was Bloomberg, and says, hey, the system is kind of broken and kind of could croak. And, we need to have a policy for break the glass on the bond market, and the kinds of things that James and myself and other Bitcoiners have been saying for some time. And, but he came right out and said it. He said it out loud. And to me, this is an enormous clue, just enormous, because why would he say it? Why would he say it now? Why would, to me, I think it's just like when Bernanke took, we were on, we were doing quantitative tightening as recently as Q3 of last year. And they went from quantitative tightening to neutral to quantitative easing in the space of the fourth quarter, right? But when they were doing that, they always gave clues, like, well, the balance sheet, we might have reasons for reserves. We might, they float these trial balloons. So to me, what Paulson just did was an enormous trial balloon where he was basically saying, look, the bond market is a possible risk factor. It's a big one. If it happened, it would be catastrophic. People should go and Google recent Hank Paulson comments or recent Hank Paulson, interview and just listen to him in his words, and he said, and if so, we should have a break the glass policy where we got a plan on the shelf ready to go. My God, does it get any more obvious that that's what they're working on? Exactly. And so to me, this was just an enormous clue. I mean, and here it is. He's saying it 1 month before we've got a new Fed chairman, right? And we know the new Fed chairman, he's married to the Lauder family, to a Lauder, and she's a billionaire, and they're old friends of Trump, and he wouldn't have gotten the job if he hadn't, basically said some of the things Trump wanted to hear. He just wouldn't have gotten it. And he's friends with Besant, and Besant has talked about having a new Bretton Woods and how the Treasury and the Fed have to work together. All these things, by the way, are written about in my quarterly, which I highly advise people to read if they're interested. And so, we don't know what it is yet, but we know that in the back room, they're cooking up the next plan. They are cooking up the next print. And we don't know the shape and size and the terms and all that kind of stuff, but we know it's coming. And these clues are very important clues to observe. And, gold and silver have already smelled it out. And I actually think Bitcoin's starting to smell it out as well. I think the 60,000 spike bottom on Bitcoin was kind of the bottom. And, we bumped around here in the 60s and 70s for some time now. And actually, one of the things that made me feel that was a real confirmation of it was go look at a chart of MSTR, MicroStrategy. I mean, MicroStrategy really broke out last week. I mean, on Friday, very significant volume. It was up like, I don't know, 8 or 9, 10%. It was up a lot. So it's like, whoa. And so here's your levered Bitcoin proxy really outperforming the market, and really starting to move. And so, so we're in it. Well, I mean, grab your popcorn because I don't think we have to wait very long. I mean, I think, Warsh gets approved. If he gets approved, I think they'll solve that problem. He'll be in there on May 15th. And first, next Fed meeting's in June, but, he's a new chairman. He can do whatever he wants, right? So who's to say he doesn't call, an interim meeting and say, okay, guys, here's the plan. Here's what we're going to do. And they roll it out. That's, look, I'm making predictions like, they're just guesses, right? They're educated guesses. I could be wrong, totally wrong, but I've been wrong plenty. But I'm just saying from this observer's eyes, that's kind of where I think this is going. And if they do that, no matter what they call it, no matter how they couch it, whatever it might be, smart market participants are going to look through it and go, oh, I get it. They're going to print a shitload of money, you know, and I gotta get into stuff they can't print. And the two categories that fit in that bucket are, Bitcoin and gold. So off we go.
As confidence in fiat currencies erodes, Lepard sees a clear trend: capital flowing into hard assets. Gold and silver have already experienced significant upward moves, but Bitcoin, he argues, remains undervalued, especially when measured against gold. In fact, Lepard reveals that he has been reallocating from gold and silver into Bitcoin due to its asymmetric upside potential. Why? Because Bitcoin combines scarcity with portability and censorship resistance. In a world where governments can freeze assets or impose sanctions, Bitcoin offers something unique: truly sovereign ownership.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.